What does it mean, CK, that I look at Bitcoin as an intrinsic valuation of a basket of sovereign credits? Very simply, you can take the credit default swap spread, the CDS spread of the top G20 nations, and multiply that spread by their funded and unfunded obligations. And I did it at the beginning of, I think it was around January. And it's a not a painful calculation, but it's, there's subjectivity to it. But at the end of the day, I'm going to get to this because I just updated my analysis recently with the most recent article that I dropped in Bitcoin Magazine about a week ago. But when I did it for G20 nations, taking the CDS spread multiplied by their funded and unfunded obligations, I came up with a valuation, what I termed an intrinsic valuation of Bitcoin of 150,000 US dollars today, which was back in January, based on the credit default swap spreads and the outstanding obligations. Now, what happens over time? Well, those spreads are volatile. Therefore, the intrinsic value can change because a CDS spread that goes from 10 basis points to 20 basis points means that country's more risky. Multiply that by its outstanding funded and unfunded obligations, the intrinsic value of Bitcoin should increase. The other way that the intrinsic value of Bitcoin increases is that the amount of debt just keeps increasing in the world, right? So there's a continuous, in my opinion, underlying intrinsic value of Bitcoin that's just going to expand. And then you get the specific country events, like in the case of China, where their spread has gone from 30 basis points to 60 basis points. That's meaningful. That's meaningful in the eyes of the market, and therefore should be meaningful in the eyes of Bitcoin holders, as the intrinsic value should increase. And this is the key I'm going to leave you guys with. Bitcoin, and actually, I'm having a lot of trouble getting this through to the market, but I think we're succeeding. Bitcoin is the perfect long volatility position. It's essentially insurance. And when you're short credit, which I believe Bitcoin is a short credit trade, the credit being the sovereign nations, you're long volatility. And that's a beautiful thing, Christian, because all your other assets are predominantly short volatility trades. Equities, short vol. Credit, being long credit, you're short vol. Humans are short vol biased by the markets. And what happens when markets melt down? Volatility explodes and people are running for their insurance policies. Well, Bitcoin's already that policy. And I think it's going to take time for the world to really understand the beauty of Bitcoin as being a long vol position.